What's up, everybody? This is Ryan. I have a really cool article. This is one of my favorites that I've come across in the last couple of weeks. As you know, or maybe don't, I'm a huge tech geek when investing. I love looking at tech companies. This came out, this is a little research report that was put out after the last earnings report. And there's a lot of rumor going around that Google is talking about spinning off YouTube and doing its own kind of IPO type of a thing, where you can own, ownership of YouTube. Why I love this article is because somebody went through and did the homework, did the math to figure out, okay, if they do that, how would that compare to the other major tech companies out there? And you guys, check this out. This is just crazy. Here's the headline. YouTube is as big as Netflix and nine more Alphabet earnings takeaways. So yes, YouTube by itself is as big as Netflix, okay? All right, so let me read this top piece to you and we'll kind of jump through a few of those 10 points. Google's fourth quarter earnings report provided a lot more to chew on than usual, as management finally responded to investor nagging for more granular information on the company's business lines. Actual performance was mixed, and not all of the surprises that emerged from that additional data were happy ones. Let's sort it out. Here are 10 key takeaways from the Alphabet earnings report. 1. Financial performance was light. Revenues are about 2% below consensus, and operating income missed 6%, but earnings per share beat easily, reflecting a lower than expected tax rate, weakness in the company's hardware business, and regulatory settlements. Nothing crazy there. 2. Everyone likes the additional transparency. I do as well, because what's cool about Google is Google has, their Google for Businesses, their Google Suite, Google Email, obviously Google Flights, Google YouTube, many other small acquisitions they've made that they make money from. So you could see a lot of where the revenue comes from, especially Google Ads, obviously. So, okay, everyone likes the additional transparency. Okay, number 3, YouTube's business is as big as Netflix. Some thought it was bigger. YouTube had fourth quarter ad revenue of $4.7 billion, up 31% year over year. Morgan Stanley analyst Brian Nowak says YouTube's 2019 ad revenue of $15 billion is about $6 billion smaller than he expected, but growing faster than he had modeled. Alphabet said it had about 20 million subscribers to YouTube music services, generating about $3 billion in annual revenues, and 2 million subscribers for YouTube TV, the company's streaming cable replacement service. YouTube's business at $15 billion is almost the same size as Netflix, which had 2019 revenue of $15.8 billion. That is incredible. The search business is bigger than some expected. Nowak says 2019 search revenues at $98 billion was actually about 6% larger than he expected. He notes that search is the company's highest incremental margin business, which means even larger underlying free cash flow. Absolutely. Here's another amazing thing about what Google's doing. Their cloud services, Google Drive. Google's got a big and growing cloud business, but it lags behind the leaders. That's actually very true. Amazon Web Services right here is going so fast in the right direction. It says here, Google's cloud segment had $2.6 billion in revenue in the quarter, up 53% year over year. Here it says Amazon Web Services had just under $10 billion. But anyway, Alphabet is still buying back stock, but there's room for more aggressive approach on returning cash to shareholders. That would make it a far more attractive company, just in my opinion. But here's the thing, actually, I want to go stop at this. When I say that, I shouldn't speak too soon, because here's why. It says, but the company keeps piling up cash. It now has about $120 billion in cash and cash equivalents, and could easily get more aggressive on repurchases or start paying a dividend. Now, let me show you this. They have $120 billion. How much cash does Apple have? Apple has $245 billion in cash. What's going on, you guys? Why would they gather that much cash and just sit on it? You got it in cash. It's just sitting in the bank. I would contend that both of these companies, while mergers and acquisitions are a very, very, very important piece of growing your company, especially at this size, I would contend that Google and Apple much like Warren Buffett, are maybe waiting for some type of major correction or worse to come along so that business valuations really, really deflate, and that current business owners who might be curious or interested in selling or being acquired get much more open to the idea of taking a lower sale price. And then what will happen? Well, let's see, 120 billion plus 245 billion. That's a lot of money to go on an acquisition spree. So yeah, that's something worth remembering. And you know what? Just out of curiosity, I don't know how much cash does Amazon have? Among 10 analysts who have estimated Amazon's free cash flow out to 2021, the lowest says 32 billion, the highest says 57. Yeah, but they're talking about cash. That's from 2017. Let's see right here. What's this? This is from last year. Berkshire Hathaway. I don't know. Oh, here we go. Microsoft 136, Berkshire 120, Alphabet. And obviously these numbers are outdated because we know Apple is way up there, but Amazon, okay, maybe 50 billion. These guys are not dumb. They're sitting on cash waiting for a great buying opportunity. I'll go here. 8, the company hinted at more rigorous approach to its money-losing other bets. 9, despite the apparent revenue and operating income miss, many analysts today upped the price targets within its stock. And 10, its market cap is back under $1 trillion. So anyway, I really love these type of things when you get these deep dives to see what's going on inside of a company. Google is not run by dummies. And what they're doing with Netflix, if it does spin off, I'll have another episode on that. So anyway, guys, that's all I got for right now. Keep in touch. Share the video if you like it.